how does knowing the property tax records help an investor know how and how much to invest in a property?
Okay, the property tax records are actually a great tool for investors. It's public record. That means anybody can access it. It doesn't cost you to get that information. The tax records are maintained by the tax assessor, and he's effectively an appraiser that appraises all the properties every year in a given county. The advantage of that is you can look at that data and get an idea without any cost of the history of a property. It has some good information like year it was built, square footage of the improvements, square footage of the land, address of the owner. It has the name of the owner or the entity that owns it. It may not be the actual individual because it could be a corporation or a business. It also has a little bit of information about when the last sale happened, like a deed date. But the advantage from your point or as a buyer's point is it's kind of that database of information you can have access to look at properties and kind of do your own analysis on a property. Not only find some of the history information, but maybe some competitive properties, maybe some properties on the same street or very similar properties that you've seen you can look up to try to get an idea if they're assessed similarly, is that a good reasonable price for that property? The assessor is, I mean, it's a necessary role. A lot of people fight these property values and try to keep them as low as possible. And historically, we always thought that the appraisals were lower than the actual price. For example, if I saw a building that was on the tax rolls or the tax records for $1 million, if I went to that owner and said, hey, I'll give you $1 million for it, most owners would say, no way, it's worth $1.5 million. And that's because every year they fought the assessor and got a lower and lower value. What's happened with this kind of funny, tumultuous market we're in, a lot of the assessments are actually higher than it's worth. So you may go to a guy now and say, I'll give you $1 million for that property, and he may take it. So you can't just use the tax records as a price like for a shopping list, because you still got to know what's going on in the market. Is it higher than the market? Is it lower than the market? And even that, within individual markets, you can't say a blanket across the board, it's higher or lower. You still got to do the due diligence, go through the property analysis, go through the competitive market analysis, and figure out what the property is really worth, with the tax records just being a little piece of the information for that.
All right. I've heard that you have a useful tool called a property scouting report that uses this data. Tell me a little bit about that.
Yep, scouting report's pretty cool in that we're one of the, I think the only people that have done this. We've taken the entire property record database of properties, every single one, and we've brought them into a database. And the advantage of that is we can sort by criteria that you can't. On the internet, you get basically property ID and street address or owner name, maybe a few other criteria like subdivision, but there's no way for you to go by price or go by category. And the advantage of what we've done on our scouting report is we've taken that data and allowed you to look by price, look by square foot, look by number of units, look by projected gross rental income. Some great tools for an investor looking at multi-tenant properties that is available nowhere else. Really pretty cool way to take some public records, take it into a new format, and use that data.